Welcome to Bears in Exile. Today is May 19th, and this is a special look at Sirius. Very interesting stock. Has all kinds of news, CEO selling shares, acquisition target by Liberty, and just like everything the past, seems like forever now, it's been slammed just like everything else. Breaking below its 200-day moving average. Is it ready for a bounce? Well, it's kind of interesting. We don't have an uptick on the short-term moving averages, so we don't have a in-stone target to the upside in that respect. We do have wobble. We do have some excessive separation. And we do have a MACD histogram which appears to be peaking and trying to roll. That's a really good sign. We have the CCI and the RSI trying to turn around. We have the stochastics trying to turn around. And we have the 14-day RSI moving average still pointing down. So, mixed picture, definitely potential for a turnaround. And the short-term moving averages also would suggest that, yes, at some point there's going to need to be a turnaround. That's all well and good. But what else do we have to work with? Well, let's see. We can see the major price consensus level from January. We can see that it has been hit twice in the last two market days. It's been pierced twice in the last two market days. It's not exactly a good thing for it to be pierced. And even though it is bouncing off of that, it would also suggest that it needs to be hit again. So, something to be aware of. But at the same time, it's kind of a push-pull because that 200-day moving average also needs to be hit again. Since it's gone through it, it needs to climb back up and hit it. So, very interesting situation where you have essentially a small range where both sides of it need to be hit, and whichever way it breaks is the direction that it's going to go most likely. Now, I would think that there's more odds to the upside just by the way that the indicators are positioned. And if we go off of that, and the short-term moving averages, I should say, if we were to get an uptick, say a snapback rally starts on Monday, you're going to get an uptick. The uptick is going to have a target of 205. And if we were going to get a even better move, let's say that we do a bubble corrective move, and at that point you have to see which direction it wants to go. Let's say it continues on for a bar retest. The bar is going to come down some more. It's going to be in the area of 210 and 211. This is just guessing off of if we do start a bounce on Monday. So we know that the upper part of the range, the target is between 205 and 211. But let's say that things don't go well. Let's say that Euro continues to fall apart. There's added pressure on this. It goes back for its retest of 180, breaks it. That's probably going to mean that this previous floor back here at essentially 1.6 will be hit. And let's say that the world is ending and it's just terrible, market continues to get slammed, then 127 would be in the cards, hopefully as a absolute bottom. Zooming out here, going back into 2011, we can see the 14-day RSI moving average still has room to move to the downside, and here we can see better the turn of the stochastics, the CCI and the RSI trying to point up, and the MACD histogram attempting to create a peak, a low peak. So yes, there's lots of reasons why it should bounce. We have good reasons for an up target of 205, and you know, at the low end, 195, the 200-day moving average. Is there other reasons to believe any of this? Well, let's see. If we look at the VWAP, price should always attempt to revert to the VWAP. And we'll notice that it is slanting down. That probably is not going to change over the course of the next few days, but it is going to lose some positioning over the next few days. So that slide, I would imagine, would take it to about the 211 area. We can see that we're way outside of the lower bands. So is this a good buying point? Yeah, it is. You know, if we zoom out some more, price should always attempt to revert to its VWAP. It does go, you know, kind of all over the place, especially if it's making a big up move or a big down move. But especially if it's going sideways, it always attempts to revert. So a reversion here, whether or not it would be completely successful, 211, I'm imagining that's where it will be. And if it doesn't get all the way to it, 205, yeah, that's entirely doable. And yeah, secondaries would seem to agree with that. If we look at where all of the buying is, frog in my throat, we can see that there is all kinds of pressure here at 225. That should be a problem for the stock should it get that high again. There should be lots of people that at least attempt to exit. It'll take a lot of momentum to break that clean. So there should be a pause there at the least if it were to get all the way up there. If it breaks a bar retest, if it continues on after a bubble corrective move. And that 205 does coincide with the major levels for February. So would it have some problem at that point? Would that be an area that it would want to pause? It would seem likely. Beyond that, you can see this level once again from January of it breaking away. And in addition to the 1.6, we can see that there is also for December major price level at essentially 1.7. So there are some levels to catch this: 1.7, 1.3, and 127. And if I pull out the black box, this one actually has enough volatility that I think that this should have a fairly accurate reading. Haven't been using this for a long time simply because the extreme melt up, and then we went into the extreme sell off, and we haven't been making waves, which is what this system relies upon. But in the case of Sirius, I think that it'll probably be pretty close. We can see that it has broken the minor trend, the major trend, and not the extreme trend. Since we've broken the minor trend, we should have a rubber band effect back to the upper portion of the minor trend, which currently is about 211. And this is going to move down some more over the next few days. We don't have an uptick target as of yet, which would aid it, but assuming that this slides down some more over the next few days, that would take it into the 208 level, somewhere between 205 208. So once again, we know, oh, and also a lot of times when you rubber band outside of the lower part, when you come back up to the top, you get through it. So 205 to 211 by the time it gets back here, entirely doable. So we know that that is the critical upper level where it has to decide what it's going to do, and there should be some resistance at that point. Now let's say that the markets continue on their way down thanks to Europe. The extreme trend is pointing way down. It currently is down here at 1.7, which does coincide with the level that we just saw a moment ago, 1.7. And assuming that it doesn't try to do that in one day, this will continue to slide down as well. Would that take it into 1.6? Yeah, it certainly could. So if you do have continued selling 1.6, I really do think that that would be a very important level. And so unfortunately, lots of reasons for this to go back up to 205, certainly 195, but I have to be completely aware that 1.6 is also in the cards. And I think that that's just about going to do it. Very interesting stock. Lots of potential, especially in the upside, but yeah, there's potential on the downside as well. Not a huge amount. I mean, 1.6, 25 cents essentially from where it is now. Not the greatest. Certainly, though, potential on the downside if it were to go down to 1.6 and break it, and the markets are just dying. 127, that sure looks like a fabulous place. Anywhere in that level, all between 1.4 and 127, sure looks like a fantastic place to buy should it get to that level. So, good luck, and that's about it. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.